Welcome everybody. It's Agent CryptoBurb speaking here. We've got a pretty legendary lineup for today's show. This is going to be one and unique, one and only on-chain analysis masterclass with legendary guests. But before we hop right into the details and you're going to find out about our guests, I want to make sure, guys, you get ready because we are going there right in a moment. Yeah, ladies and gentlemen, welcome. Super stoked, super excited for so many reasons. Because I'm joined by my good friends who are professionals in tiny bit different field. Well, compared with what I do, because as I mainly focus on the technical analysis, I also love backing up my ideas with a bit of on-chain sprinkles on top of it. And what can I say? Two major names in the space, two legendary people in the on-chain analysis field are here with us, joined for our 14-day free trading congress. It's my pleasure and honor to welcome Dylan LeClair and Will Clemente. How is it going, guys? All good?
Yo, thanks for having us.
Hey man, what's up?
Amazing. Yeah, doing great. I'm super stoked and excited. The markets are going down, right? And we're going to probably answer some of the questions that so many people may be, interested to know the answers to. So basically, that the reason I decided to get you guys on the show and to, of course, like happily have you accepted that is because I have huge respect for you. This is definitely a very scarce and very rare feature to find a lot of quality in the Twitter, right? On the Twitter, you find mainly trolls, you find many people who are self-proclaimed professionals, who are self-proclaimed, analysts, no matter how you name that. The truth is that they are not necessarily the good people to follow per se, right? And here it's a little bit different. We've got two legendary names, and I want to guys make sure that you are very well aware that we're talking about now on-chain analysis with Dylan LeClair, who is of Bitcoin Magazine, who represents, who works for the Bitcoin Magazine. You're going to be able to hear probably a little bit more details for how it works in a brief moment, if Dylan's so kind about that. And Will Clemente, everybody, is a very special person as well. 19 years old. This is some crazy young age. I cannot remember what I was doing, when I was 19. Right. This was definitely in the on-chain. And Will Clemente does work as a lead insights analyst for Blockware team. And all that said, I want to give a tiny bit of stage for you guys to perhaps tell us a little bit more, because there are so many newcomers, people who are joining, and they have yet to get to know you well. Dylan, if we are to start with you.
Yeah, so like you said, I work for Bitcoin Magazine. Technically, like my title there is head of market research. I lead off the product called the Deep Dive, which is like a daily market newsletter about Bitcoin, for the most part, on-chain derivatives, but we kind of cover like some of the just like legacy financial stuff as well. And kind of the whole goal is just to provide a view for what's happening under the surface that the everyday kind of market participant may not see or may not understand, and we try to break that down in a really simple way. And just recently, I guess I also joined UTXO, which is like a Bitcoin denominated or a Bitcoin alpha fund, which we basically, the whole point is to try to outpace Bitcoin, just holding Bitcoin. So yeah, that's me, and I appreciate you having me on.
Amazing. Will Clemente, what's up about you, buddy?
Sure. Hey, thanks for having me on, man. I remember we recorded a guy, it must have been like 3 or 4 months ago. It was a while ago. I'm happy to be back on. Yeah. So I'm lead insights analyst at Blockware. I kind of head all the content stuff there. We have a newsletter that I send out every week, as well as a podcast I do with different people in the space, usually market-based. I tend to have more trading-oriented people on the podcast, fund managers, etc. And then as well, I also do a weekly video version of basically an iteration of the newsletter, but it's essentially a market overview on the YouTube channel as well. And then I just kind of post my thoughts day to day, as well as a lot of memes on Twitter. So.
Yeah, memes is what runs the Twitter. Like, people don't give a damn about on-chain analytics. People don't give a damn about charts, right? The memes is what matters and drives this entire crazy space. Listen,
yeah, I think it's like probably a third of the people follow me for actually following me, or probably like 10-15% are probably bots. Another portion probably just follow me just to have a Glassnode subscription, and then the other portion just follow me for memes. So yeah.
Yeah, it's a good combo. It's a good combo. You have to agree with that. By the way, I want to congratulate to you both guys, because your growth in the past, months of the professional career, it's been skyrocketing. Like, this is some insane numbers, right? We're talking about Dylan being at 83.3 thousand followers. Will Clemente goes well past, I think, 415,000 almost. That is crazy. Those are crazy numbers. And I can remember when we were discussing that, on the show as well, the on-chain analytics a couple of months ago. Like, this has been nowhere near close, these numbers. So congratulations on the growth. Like, what's your magic? How do you do it?
Dylan?
Just put out my thoughts on a daily basis is what I've been trying to do. I think if people think that you're providing value, they share, and kind of the word gets out. So that's kind of been my thinking. I know that's what Will's done, and he's blown up in a big way. I think you have 500,000 or so yourself, so I think you kind of have an understanding of how it all works.
What's your magic? What's your secret sauce, Will?
Yeah, I mean, it's been cool to see your account blow up as well, like Dylan said. I think it's just staying consistent. Dylan and I met when we both had like 2,000 or 3,000 followers at the beginning of, it was actually somewhere like the middle of last year. I forget exactly when. It was a long time ago. And we're consistently just putting out our thoughts on the market and Bitcoin just as an asset class. And you just stay consistent and keep putting out your thoughts, and if you're passionate about something, then the community will see that. They don't really care if you're a anonymous anime character, or if you're a kid who doesn't even have any facial hair. Either way, as long as you're providing value, people just see the content and they'll flock to that. So I would just say for anybody who's looking to like build up a platform for themselves, I would just say stay genuine, stay authentic. Also, just stay consistent. That's probably the biggest thing. And then also curate your content in the sense that make it presentable. If you're on Twitter, create your content in a way that people are going to want to retweet it, right? Make your tweet clean looking, minimalistic, have a nice visual with it. Make the wording nice, like just different little things like that. That have kind of helps with the growth side of things. But yeah, more than anything, just staying consistent and be a genuine person.
Yeah, this does sound like almost like if they were, closing lines, and that we were supposed to end the show already, but we are nowhere near that, ladies and gentlemen. Listen, I think one of the points that you mentioned, about the consistency, I couldn't agree more. The consistency is what drives the people, is what drives this entire legacy that you're building, the platform, just like you're saying, the audacity and publicity, and that is what people respect, because most of the people lack the consistency. They lack the discipline, and when they have very powerful units that you guys are both full of this consistency, they just simply fall in love with the consistency in such a way. And I think moving on to one of the main merits for today's discussion, everybody, like one and the main question that I can see flooding in the chats, in the comments, on Twitter, outside Twitter, on the streams, is why is Bitcoin going down? Why is Bitcoin going down, Will? What do you think?
Yeah, I think a lot of times on the shorter term timeframes, Bitcoin tends to be driven by derivatives and then also just price levels. But I think recently it hasn't been we haven't seen a large kind of long liquidation cascade. I think it's just been spot selling. Sometimes, believe it or not, people actually just sell their Bitcoin. Not every move down is always a leverage wipeout. And I think over the last couple of days, especially from Bitfinex in particular. You've just seen a lot of spot selling, and sometimes it's just as simple as that. People have just been taking profits. We've been pretty much up only since we retested 40K at the end of September. We've kind of stalled out here, had those 2 failed breaks above all-time highs. But the way I see this is like, when I think about kind of when I frame Bitcoin in my head, the way I see it is like you have these kind of, if anybody's familiar with like Ray Dalio's like long-term debt cycles, short-term debt cycles, you're familiar with this chart where you have this long-term kind of wave pattern, and then within that you have these kind of shorter-term oscillator that kind of moves over that broader term pattern. And so like on-chain to me is this macro cycle that we're watching, and on-chain is not to be used for kind of day-to-day movements. It's more so to be looking at kind of what's going to happen in the next 3 to 6 months, and then on the shorter term time frames, there's often so many variables that it's almost impossible to attribute price action to one thing, but it tends to be driven by derivatives. A lot of times, we have these really liquid perpetual futures markets with high leverage, and they tend to kind of whipsaw the price in different directions, as well as recently sometimes you just see people selling spot, and that's also you see price interact heavily with order book, as well as price levels. But yeah, from an on-chain perspective, not to give a cop-out answer, but I don't really think that on-chain is best for always explaining these shorter-term moves. We have seen some spending of older coins, but aside from that, I don't think there's anything that we can pinpoint and say this from an on-chain perspective is exactly why price is necessarily moving down. It just seems like we've had some heavy spot selling coming from Bitfinex, after we've pretty much been up only since that 40K retest. So
yeah, we take the short-term fluctuations with a tiny pinch of salt, and Dylan, tell me, is that Barry Silver selling off? Is this big wig that he meant on Twitter? What's up with that?
Yeah, I don't know about Barry, but I think Will kind of nailed it. On-chain is really just kind of mapping out these broad trends happening over 3 months, 6 months, even a year. You see, these long-term trends of long-term convicted hodlers, stackers, just accumulating during bear markets, during consolidation periods, and that's really basically loading the spring up for these parabolic bull markets. And from that sense, we saw this massive accumulation for years after 2017. We saw the bull market at the end of 2020 and into 2021. A lot of those, older coins distributed, I guess if you want to think of it as profit taking, and then kind of the spring was reloaded over the summer. You saw a massive reaccumulation. So now we're sitting, at 58,000, whatever we are, right below all-time highs. I mean, Bitcoin is like a 100 vol asset, so like really in the grand scheme of things, if you're looking at the 5-10 year log chart, you can't even see the dip, right? It looks like we're at all-time highs. And you have derivatives, you have all this stuff. I mean, a lot of the times, like the big whales selling today, they're probably these guys are extremely bullish on Bitcoin. They just want more, right? So they're just trying to get people. This
is why they are selling. They're bullish. That's why they're selling. Is that what you're saying?
I mean, essentially, it sounds crazy, but like, Bitcoin's absolutely scarce. The only way you can sell Bitcoin, like literally, the only way you can sell is by buying it, by acquiring it. If you want to sell, you have to acquire some first. If you want to short sell, well, you eventually have to cover and buy it anyway. So if you're selling Bitcoin, like you have to have a stake. Peter Schiff, no matter what he tweets, can't sell any Bitcoin. And so anybody that's selling Bitcoin today, I don't think anything from a thesis standpoint has changed. I mean, actually, I know that it's, the thesis is as strong as ever. And so something like a dip to 58,000, if you would have told me that last year, I would have laughed at you. So I think it's important to kind of have some perspective. I mean, if someone is levered up and, at the cost basis of 66,000, well, maybe you should manage risk a little better and maybe trim some off. And so you don't get wiped out, because the worst thing you can do is overexpose yourself. But I think just as long as you're accumulating a little bit of light leverage is okay, as long as it's serviceable. Preferably not leveraged long on perpetual swaps with Bitcoin as your margin, because things can get pretty hairy. But we know where this thing is going over the next couple months, over the next year, at least, we think we know where it's going. And I think, the absolute scarcity and just the game theory of Bitcoin kind of ensures that we're going to see a lot higher prices at some point in the near future. So, 58,000, if that's a dip to you, then you should be happy because, the thesis remains unchanged.
So there is a light in the tunnel. There are some glimpse of hope in the horizon, everybody. That's what you can read, some sort of like between the lines. And I can only agree with that. I can only agree with Will. And I think it's actually a good time to slowly start discussing something that so many people have joined our stream for. There are approximately 890 people, almost 900 people watching the live. For some people, it's still early, especially if they come from the US side. So it's definitely numbers are boosting. But many people know you for insane quality of on-chain analysis, metrics, insights, quality tips that you guys are sharing out there. So to start with you, Dylan, as well. Like if you were to define very briefly for everybody who has just joined, they have no idea what that is. Like if you were to define what on-chain analysis stands for, what would that be?
Yeah, so essentially with Bitcoin, with this public ledger, we have basically a complete transparent view of all the ownership on the Bitcoin network. And so it's unlike any other asset ever where, with a stock, you can see the volume that was traded intraday, or you can see, hey, this executive sold, but there's not the radical transparency that Bitcoin holds. You couldn't see what price every gold coin was acquired by. I mean, that's quite obvious, but with Bitcoin, you have this immutable, incorruptible ledger of ownership, and so you can see, the average cost basis of everybody on the network. You can see how many coins haven't moved in 3 months or 3 years or whatever it is. So with a lot of this stuff, you can really kind of see when, on a relative basis, it may be attractive to allocate or acquire Bitcoin, or conversely, it's hey, maybe it's time to hold off a little bit and not be buying after the price is 10x or 50x the cost basis. And so, I mean, I'm just throwing things out there, but because we have this radical transparency with the Bitcoin ledger, the Bitcoin blockchain, that kind of gives us a lot of alpha about what's happening under the surface.
Okay, I appreciate it. Well, do you think, or rather I should ask, to what extent you think on-chain analysis is actually reliable?
Right. So like kind of as we alluded to a few minutes ago, I think there's a bit of a misconception via Twitter that on-chain analysis is to be used on intraday timeframes or kind of on a day-to-day basis. It's definitely not. On-chain is kind of a macro tool, and I kind of look at it. I think the sweet spot for insight you can get through that is kind of this midterm view, kind of 3 to 6 months out. What we're looking at here is kind of what is the broader trend in terms of investor behaviors. When it comes to on-chain, it's similar to technical analysis in the sense that at the end of the day, we're just tracking these investor behaviors and we're trying to identify, are these behaviors resembling where the market has historically gotten overheated or where it's historically been a good time to accumulate. And so with that in mind, on the intraday fluctuations, we have all these different factors that can come into play. But when we're talking about, are we, in a bull or bear market, are we going to see price appreciation over the coming months, or are we in a prolonged downtrend over the coming months? That's where on-chain can be most useful. A lot of times I'll post a chart, and it's, I'm talking in like a several month time horizon, and then you have some guy reply with like the 4-hour chart saying, oh, well, the price, it's like, come on, man. Like, I'm not talking about like the next 2 minutes.
I get so much of this. I mean, I can only feel, I know how it feels. That's what I can tell. This is pretty insane, but again, the reason is so many people are joining, so many people are joining right now. You can tell this is definitely some very start of an actual mania phase when every single person, their mother, their grandmother, and actual goldfish and goldfish also joined the market, right? And that is where it starts actually to get very dangerous, because the volatility, the higher and upper we go, the volatility starts kicking in more and more heavily, right? And the volatility in the financial world means risk for those who actually don't know this basic. And Speaking of risk, speaking of protecting yourself against risk, in terms of on-chain analysis, how does that help? Do you have your favorite on-chain tool that you actually like use? Your favorite go-to on-chain analysis tool metric? Dylan, what do you think?
Yeah, so I mean, I shared some slides, and if you want to break into those, yeah. So I mean, this is kind of, and this is from yesterday. So sorry for the not updated price here, $2,000 lower. But so realized price is essentially like it's like the average cost basis of everybody on the network. If we're thinking of instead of price, we're thinking of market capitalization. Realized market cap is like 450 billion, and market cap is like 1.1 or 1.2 trillion. So you can kind of see like, and during bull and bear markets, you see some interesting trends with what's happening with realized price against price. So during bull markets, price gets really bid up, and then realized price kind of lags behind because essentially you have all this new capital coming in looking to secure an allocation, and there's just not enough Bitcoin to go around. So price gets bid up on the margin. And then you kind of see all these old holders cash out. And so if you're looking at, like, say, a ratio of realized price versus price, you see some interesting stuff over the long term. This is the ratio of the two. And Z-score just means it's standardized, standard deviation. But if you don't know what that means, that's fine. Essentially, this is just a ratio of those two metrics over the long term. And so we can kind of see what happens every bull market is this ratio really blows out. And during the bear market, the ratio comes back in. Price gravitates back towards that realized price, almost like it's almost like a floor. And so something like this it's helpful because you kind of understand the dynamics of what's occurring during a bull market. It's that price is getting bid on margin. The free float of available coins is not all that much, and so any new capital has to bid up the price. And so this is what's happening when you have these seemingly random bull markets. It's not all that random, and it's because hodlers set the floor. They kind of lay the foundation for these bull markets to come. And then any marginal amount of new capital that enters, basically causes the price to explode. And so, I think we're kind of in the middle innings of a double bubble. If you're looking at 2013, maybe even if you're looking at the 2017 cycle, you saw these big drawdowns. None were 55%, but during bull markets, these sharp pullbacks, everybody thinks it's over. It happens multiple times. So that's kind of where I think we are in the market. And I like realized cap or realized price as a foundation for a lot of analysis.
Mm-hmm. Okay, so do you think then, based on what you're sharing, for market value to realized value, do you think, because the metric kind of like shows it's somewhere still in the middle between the actual like safety zone and the danger zone, right? Is this actually where you think the price is at? Is it somewhere in the middle, or where do you position yourself, like in the chart?
Yeah, I mean, I think right now I still I'm basically fully allocated to Bitcoin. I guess if you're on a net basis, I'm over 100% allocated with some leverage that is I guess similar to Michael Saylor. Like, it's not mark to market every second like a perp contract. It's more like off the balance sheet leverage to secure, to allocate to Bitcoin. But I kind of think of Bitcoin as my unit of account. So even if Bitcoin draws down 50%, if I'm accumulating sats on my balance sheet, then I'm all right. And I know that I have this pristine collateral that if the price draws down a whole lot, then I can use that to collateralize up. I can use that to borrow. I can use that to speculate and invest in. And so I kind of, thinking that we're in the middle of this bull cycle, I still have that leverage on. And I think my plan more so at the top, instead of selling my whole entire stack and waiting for an 80% drawdown and dealing with the tax implications of an asset that just went up, 1,000% or whatever it is, my kind of strategy, how I think I'm going to play it is kind of just de-levering and risking off. And, if a 50-80% bear market comes, and then that's fine, because long term I know where it's going.
Okay. Will, I mean, it sounds good. Will, do you have your own kind of like go-to favorite, like one and only 100% useful tool that you use for on-chain? What is that?
The way I look at this is we kind of have a toolkit, and so you pull different tools out of the toolkit depending on where you are. And what the circumstances. So for on-chain, we do have some stuff that you can look at on shorter term timeframes. One of them, although this, like I said, I think ONCHAIN is best used for this kind of midterm view, but you can look at things like the spend output profit ratio. That's probably the best on-chain metric for looking at kind of like an intra-week basis. But
output profit ratio, is that what you said?
Yeah, spend output profit ratio. So we're looking at essentially this state of profit that the market is trading in. So we run the ratio of all the realized profit and all the realized loss on chain on every given day, and you can essentially get a gauge as to are market participants realizing profits or realizing losses in aggregate. And so in a bull market, market participants are not going to want to sell their coins at a loss in a raging bull market, right? And then conversely, in a bear, they're not going to want to. Every time the market rallies back up into a state of profit, it basically gets faded back down. So with SOBR, you have this oscillator that essentially in a bull market, you buy the dips along one, because one is kind of that neutral threshold where profit and loss balances each other out. And then you fade the rallies or underside retests of one when you're in a bearish trend. So that's on a kind of a shorter term time basis. In a broader sense, and these are my two favorite metrics, it's the liquid supply shock ratio, which I created with Willy Woo. And so this looks at essentially the spending behaviors of different on-chain entities. So the way this is calculated is you're comparing the liquid and highly liquid entities, and you don't need to necessarily understand the math. It's just looking at liquid entities take in and hold at least 50% of those coins that they take in. Highly liquid guys only hold at least 25 or less than 25% of the coins they take in. And then conversely, illiquid guys, they take in and hold at least 75% of the coins they take in. So for every 4 Bitcoin they take in, they hold at least 3. And so you run the ratio between what's essentially the weak to strong hands, and you can get a nice oscillator to track kind of accumulation behavior. This was one of the metrics that I used to kind of call that reversal off of the summer lows when everyone was super bearish at 30K. What you saw throughout the summer was this was showing a bullish divergence. So price was ticking up. Price was ticking down. Meanwhile, I could share my screen real quick. Hold on.
Go ahead.
Meanwhile, the oscillator was ticking up. So you had a bullish divergence between the two. Here, I'll go ahead and share screen.
Yeah, exactly. Beautiful. We can see your screen.
Cool.
You gotta clear your tab, son.
Yeah. In the meantime, everybody, whereas Will is loading his screen for you, make sure you actually smash the likes, especially if you've just joined our 14-day free trading congress and are watching that live on YouTube. Make sure you smash the likes, hit the subscribe button, turn your notification bells on, and also leave some kind comments for our guests, for Will, Clemente, and Dylan, LeClair, and everybody. Listen, there's going to be potentially like very, very short Q&A session if at the very end of the stream, if we manage to squeeze that in time. So if you have any questions, if you have any specific, smart questions that you want to ask, make sure actually put them in the chats, leave some comments with the questions. We'll try to actually go through them as we can later. And I think, the chart is playing. The chart is playing right now. Okay, is that right?
Yep. Cool. So like I said, you're running the ratio between the highly liquid and liquid guys to the illiquid guys. What we see is that in bullish trends, you see this uptick. So more supply gets locked up. And it's very interesting that we're seeing a second upthrust, just like we saw in 2017. But whenever we start to see supply becoming liquid, so as you can see, this is a bit of a leading indicator. So you could see supply started becoming liquid right before the peak, right? And so whenever you would have started to see supply becoming liquid, that would have been a big red flag. So you have all the supply that was previously locked up was now coming onto the market, and you can see that right there. It's kind of hard to see because it's in log terms, but you can see that it starts to tick down as price is peaking, and then we have a strong downtrend in the ratio through the bear market. We kind of have this consolidation phase, moving into another uptrend. Interestingly, right after March 2020. And then we had this, once again, we had this as kind of a leading indicator before May. So as you can see, this started ticking down before the May crash right here. And then we had a down draw, but then to kind of call the reversal, what you would have looked at, and once again, this is a leading indicator, you would have started to see this uptick, which you did, as price was grinding down. So you had this bullish divergence of supply was getting locked up by these guys. Meanwhile, price was grinding down. Then we had this supply shock effect on the market there. And so the price finally popped. Yep. And then we've just broken above 2021 highs. You see this big uptick that we've had over the last couple days. So basically shows that strong hands have been buying the dip essentially. And based off of this metric, I remain bullish until you start to see a decline similar to here or similar to here.
Okay. So that's, well, because I understand that, so many people, again, may some sort of like see a lot of similarities for the actual technical momentum, the momentum per the pace of the growth, the rate of growth, rate of change, if you will, for how fast the metric changes, be it for the technical, for some simple moving averages, or even for the on-chain metrics, just the liquid supply. This is a liquid supply ratio, right? That's the name of the indicator.
Yep. And then we can also take this a step further and we can actually run an RSI over the metric. And so you get another interesting signal for people familiar with TA. What you see is that, and this is a 60-day period RSI, what you see is that we had this bearish divergence leading before this price drawdown in 2017. So this bearish divergence paired with seeing this decline leading up to this major cyclical peak. And then you pair this with some other on-chain metrics, obviously, to get an even better picture. But just based off of this alone, you would have seen this declining. Meanwhile, we had a bearish divergence. So this would have been, we would have been cautious here, right? Especially after you have multiple touches, like right in here. Once we broke back above this downward trend line, that kind of marked the bottom of the bear. As you can see here, we had this bullish uptrend, or bullish break above. Then we had this bullish uptrend from kind of 2019 leading into earlier this year. What's interesting, after we broke all-time highs of last year, then we began another bearish divergence similar to 2017. And note, you want to become cautious after a few touches, after kind of the third or fourth touch in the divergence, right? You see that here, here. So you would have been bearish kind of right in this area using this metric. Once we broke this uptrend, that's right before we had this drawdown as well. So it's another way of illustrating kind of the same thing, but just looking at it in terms of an RSI rather than the raw metric. And then as you can see, similar to at the bottom of the bear in 2018, 2019, we broke above this kind of downtrend much quicker than we did here. But we got right back above that downtrend, and we're now chilling up here. And so, looking forward, what you would be looking for now, we sit in bullish territory currently. What you are going to look for to kind of become cautious is to start to see a couple touches and some kind of bearish divergence that forms.
But doesn't it look like actually like, that it's actually like super bullish based on these two metric?
Yeah, it's bullish for now. Yeah.
Okay. Well, I mean, this, applying RSI, like basically the momentum is what drives it, both on the on-chain, as you can tell, the rate of change, no matter you name that. But question to you then, Dylan, on top of what Will just said, do you conclude somehow, like by the on-chain metrics, by the on-chain charts that I actually watch? I personally watch an UPL, which I find a very good metric. But based on all your charts that you're actually like very, very reliable for, that they are reliable for you, do you think that Bitcoin peak is near?
I don't actually. I think for Bitcoin to go for Bitcoin to top, I guess, or the market to top, or for the start of another bear market to come, I think what you need to see is the price to go parabolic, and that because that's what unlocks all this supply. Essentially, like we know with on-chain, we know the supply side of things. We can see it in real time, moving, exchanging hands. Moving from one address to the next. and with demand, that's essentially reflected in price. And so when price goes parabolic, you have all of the supply that basically was acquired at 10,000, 5,000, 1,000 that says, okay, I'm gonna maybe take some chips off the table. And so that's when you kind of see, just like we saw in April, you saw basically old holders selling into the rally, starting at like basically 12K, 15K. But there was so much capital inflow that it didn't matter. Eventually, the buyers just get exhausted, and there's so much sell pressure that the market has to, readjust and find some equilibrium lower. And so I don't think we're there yet. And just from the on-chain side of things, we're not seeing massive profit taking. We're starting to see it a little bit, but that's pretty typical, pretty normal for when Bitcoin's flirting with previous all-time highs. And so just from an on-chain side of things, I don't think the top is anywhere soon. And I think the longer that we honestly chop around and consolidate, the more extended, the farther out, maybe the higher that the Bitcoin top will actually be. The longer we chop around, the more that, I don't like to use the term intrinsic value, but I always find myself using it. It's more like the subjective value of Bitcoin. The longer it just chops around, the higher that floor, that floor rises. And so that's how I kind of think about it. And, I'm happy to have Bitcoin here at 57,000 now. It's not something that I lose sleep over.
Yeah. And you see this natural behavior between the long-term and the short-term guys. So
you want to play a chart, maybe?
Yeah, sure. Hold on.
And meanwhile, everybody, again, there's going on. We have ongoing giveaway. Okay, in the giveaway where you can actually win, something that is very variable because it's going to be 1 month of free Birb Pro, our actual tool, our indicator, our trading system all in one, if you will. There is going to be a free chance for everybody to win. We have a link to the giveaway in our video description on YouTube. Make sure to actually go and visit there, right, guys? There is a link for the giveaway. And we have a giveaway secret code that you have to type in there, and it's ONCHAIN. Okay, just like it displays in the screen right now. Its giveaway secret code is ONCHAIN. Make sure you actually go to the video description on YouTube and find the giveaway link to get a chance to win 1 month of Birb Pro for free of any charge. Try your luck, guys. Go ahead, and I can tell Will is already having his charts play on.
Yep. So, like I said, what you're looking for here is the behavior between long-term and short-term investors. Hold on. Let me fix the scale here.
No worries.
Okay.
Smash the likes while Will is smashing the scale. Right. You guys want to smash the likes. Hit the subscribe button as well. You would be surprised how much it actually helps to YouTube accounts to grow. You have to trigger the algos. You have to kick off the algorithms of YouTube to actually boost your growth. And that is something that Will Clemente has always been doing as well. Very recently, for very successful interviews that he had with Plan B, and I think it was with Willie Wu as well. That is something that every respectful person who delivers to you free content on YouTube is going to ask you for it. So if you appreciate the time that Dylan is spending with us, if you appreciate the time and the insane amount of wealth of knowledge that Will and both of them are sharing, make sure, guys, you actually interact kindly, leave some kind comments as well, and Will, take it away, please. Go ahead.
Sure. So what you'll see is, this pink line, which is the short-term holder supply, and then this, I don't even know what color this is. You want to call this like brownish green. It's kind of an ugly color. That's the long-term holder supply. And so what you see is this kind of oscillating behavior between the two throughout Bitcoin's history. And what you're looking for is into bear markets or into weakness, you see long-term holders buying, and then into strength, they then kind of scale out. They don't perfectly time the tops, but they scale out into strength, while the short-term guys basically buy their bags the whole way up. As the new speculators come into the market, we get into this state of exuberance and euphoria in the market. That's when you have your Uber driver and your grandma telling you to buy Bitcoin. So that's what's shown by the short-term holder supply increasing. And so you'll see this dynamic. So going into the first 2013 double pump, you'll see the long-term guys on the top begin to scale out as the short-term guys stepped in, heading into this kind of mini, whatever you want to call this, mini bear phase, similar to what we had over the summer. In 2013, you had all the short-term guys leave because Bitcoin went down like 85% peak to trough. And the long-term guys came in and set the floor, and then heading back into the, they literally missed the whole time then you want to be accumulating, but the long-term guys came and stepped in and bought. Meanwhile, as we headed back into the second kind of broader peak, we call this like the double bubble, the long-term guys then began to scale back out and sell back to the short-term guys. And so you see this dynamic play out heading back into the bear. You see long-term holder supply increasing as short-term guys on the bottom leave. Heading into 2017, long-term guys scale out again. Short-term guys buy their bags the whole way up. Heading back into the bear, same thing. Short-term guys leave. Long-term guys buy back into weakness. And you saw this again last year. So this is representative of that, as well as the short-term guys aging into long-term holders into the bear market. So we use 150. Go ahead.
Yeah. I'm just checking because I assume this is a log chart, right? On the for the upper metric for the shitty color, if you will. But basically, what I'm just looking at, many people will probably get a bit confused because if they're good, if they're used to using the regular charts, I do believe that you would expect to see some insane spike. Let's say whenever the bear market floor just happens, right? And in 2018, you have this, $3,000-$4,000 kind of like lows on Bitcoin going on 2018 December, and you would expect just like you said, those giants, those massive long-term players to kind of like get their hands on Bitcoin heavily. So you would expect a spike, but then it's not really presented in the chart. So my assumption is, and the way I understand that, and I think it's correct, that you are seeing here the logarithmic chart in a way that it wouldn't show you like those spikes in the logarithmic chart the higher you go, the upper you go. Is that right, Will?
Yeah, and also I think like they kind of slowly grind out the floor, and it's not necessarily like one specific day where you're like, okay, the bottom's in. It's more of you're watching this kind of week to week behavior, and you see the slow kind of grinding out bottom of short-term holder supply. And then this is another way to visualize this. So by running the ratio, let me see, I think it's in this newsletter. By running the ratio of the long-term guys and short-term guys, we get another interesting metric called, hold on if I can find this, called long-term holder supply shock ratio. And so essentially this is comparing the short-term guys that we just looked at to the long-term guys. And so by running that ratio, you're essentially adjusting it for supply, because over time you're going to see long-term holder supply naturally increase as you just see more circulating supply, right? But by running the ratio, you're getting the relative difference between the two. And so that's what we have here. So this is the long-term holder supply shock ratio. And similar to technical analysis, we can draw trend lines because at the end of the day, we're just plotting out trends in human behavior, right? And what you see is that whenever we kind of tag or come close to this upper bound, we've kind of peaked out. Meanwhile, whenever we tag, and this is an even clearer signal, whenever we tag the bottom, that's showing that we're kind of bottoming out in a macro sense. And whenever we tag the bottom, it's kind of counterintuitive. What you're seeing is that supply is getting locked up by long-term holders whenever we tap the bottom. So this is whenever we tap the bottom, we essentially get a supply shock in the market. That's the way to think of it. And meanwhile, at the top, that's when a lot of supply is now moved into the hands of short-term holders. And so as you can see, we tagged the bottom of here right at the, in the 2015 bear market, right at the bottom of the 2018 bear market during COVID. So all these are great buy opportunities along the bottom of this trend line. We recently tapped that about a month ago. And so now what I'm watching for is us to move back to the upper bound of this trend line to kind of become cautious. Note, we never kind of reached that peak level earlier this year, and that kind of aligns with a lot of other on-chain metrics that we never really reached a full, a fully euphoric state in the market. And then we at this point now we have a lot of runway to go in terms of coming back up and reaching this upper bound. As you can see, like here, we didn't perfectly time the top. So, as we kind of get into the upper half of this, I'll probably become cautious right? And I'm not going to look to say I'm not going to sell until it perfectly taps the top. But as you start to see the metric move back up towards the top of this kind of a wedge, whatever you want to call this pattern, then I'll become cautious. But for now, as you can see, we're not even close, right? We're literally at the bottom. And actually, we're at the bottom. If I kind of remove this, if I were to draw like a horizontal line, what you see is like we're actually at the lowest we've ever been in the ratio. It's actually now starting to turn over. As Dylan mentioned, we're now starting to see some spending from these long-term holders. I published this like a month ago, but we reached the highest kind of peak hodl that we've ever reached in the history of Bitcoin about a month ago. So long-term holders,
sick. That is sick.
Yeah. So long-term holders locked up the largest portion of supply in Bitcoin's history about a month ago.
That is crazy. I think, wow, that is impressive. Like everybody, listen, hold on for a moment, hold your breath. I mean, just try to digest what Will's just shared with you. I think we are looking at very extreme level, and the extremes are what matters in the market. The extreme lows and extreme highs is always what matters and drives the markets upwards and downwards after the reversals. And this, this is some very valuable tip. And speaking of tips, by the way, Dylan, I want to very quickly just kind of like, ask you about what kind of like, tips you have got that made, the biggest impression. Like, what was the best tip you've ever received? Like this one tip that somebody gave to you about investing, or did you find it somewhere?
I think, it's tough to think of one person. But I think in 2020 and 2021, it's, using the dollar as a unit of account is a losing strategy. And so, I transparently say I use Bitcoin as my unit of account. So if I, buy a stock, or, I'm not a big equity investor, but if I'm, doing anything, any sort of speculation or investment, and it doesn't end up netting me more Bitcoin after taxes, in my cold storage, then I look at that as a loss. And so I think just kind of shifting your mental unit of account. Yes, there is day-to-day or week-to-week volatility. But what we're doing here, the on-chain analysis that Will and I are doing, the whole point of it is, we know where this is going long-term. And the whole point of this is to basically increase our allocation strategically in the most efficient way, effective way possible. And so the fiat gains are something that we know is going to come. Bitcoin, crypto, it's going up a lot, but so is everything, and that's because of kind of the money printing, the debasement that's happening in the legacy system. And so a lot of people are thinking they're getting rich, but they're not. Right? If everybody's house is up 30%, did you get richer? And the answer, in my opinion, is no. And so I think shifting your mindset to thinking a Bitcoin unit account, despite the week-to-week volatility and whatever, that's probably the best strategy, the best tip that I can give anybody that is thinking over the medium to long term.
That is, whoa, that is some heavy tip though. This is not really obvious. This is not really obvious. Like most of the people, I fully agree. Most of the people, would try to account their money, their wealth, their whatever, in terms of USD, in terms of fiat, which actually right now, just like you said, is slowly collapsing. Slowly, or actually more, it's accelerates its own collapse. And well, I'm just wondering, before we move on to the final points of today's show of 14-day free trading congress. Will, very quick, I want to ask you same question, like the best tip you ever got, the best tip you ever found, mentor told you.
I would just say to talk to people. I think the most alpha is just in networking and asking questions. I found, and granted, like I'm blessed to have the platform I do now to be able to reach out to a lot of people. But in general, if you just show genuine interest, and reach out to people and kind of show that you've done your homework, people are very willing to help you. A lot of my understanding of stuff comes from being in different trading chats with other, fund managers or on-chain analysts, and asking questions and kind of collaborating and putting our minds together in that sense. So I think the most alpha is in people. Reach out to people. Worst comes to worst, they ignore you, right? And best case is you become a friend with them for life, or they give you some insight that's really interesting. What do you have to lose by just reaching out to someone and asking them a question. So I think the biggest alpha is people.
Jesus, wow, that is some heavy tips, everybody. I would not like if I were to give you that tip, like 9 or 10 years ago when I was 19. I would probably not come up with that so easily. So huge respect to you, Will, for that, and huge respect to you, Dylan, as well. Listen, everybody, I think if you combine those two tips, if you start measuring your values, like the measurable values, I'm talking about money, the wealth, the investments in terms of Bitcoin, something that is actually more deflationary than the fiat that you use, just like Dylan said, that you actually get richer on the paper, but it doesn't really come and follow up with any value behind it. Or just like what Will just said, about contacting and connecting with the people. Wow, this is some very powerful combo. I want you to take away, everybody. Take away that, definitely is a very, very strong message out of the stream. Aside from insane tips that we found on the on-chain basis with Dylan and with Will. Listen, I think we're slowly nearing to the final moment of the show. So if you are fine with that, perhaps we could pick 2 questions each and try to answer them very, very briefly. Is that fine with you, Dylan, Will?
Yep.
Okay. So we'll start with Will. Let me actually just find one. Let's see. In the meantime, guys, smash the likes if you appreciate the time, because I certainly do. If you appreciate the time that Will and Dylan have spent with us so far, make sure actually go ahead and smash the likes and leave the comments as well. Leave the questions as we go. There is your chance. You have a chance to actually get answers to your questions, but primarily go ahead and follow them on Twitter. There's some insane tips. There's some insane alpha content being shared on a daily basis, if not more often, on their accounts, in the newsletters, in the Bitcoin magazine, and everywhere that you guys see Will and Dylan appear. And if we are to proceed with the questions, there is a question from Kevin, I can tell, for whether or not there is a consolidation of holders. Perhaps Will or Dylan, you want to take it away for a moment?
I guess I can take it. Yeah, I mean, what we're seeing is basically, for the most part, you have, from the on-chain side of things, hodlers, long-term hodlers are staying put. A little bit of profit taking right at that kind of 60K level when we hit that about a week ago or whatever it was. But for the most part, we haven't seen any big sort of profit taking. The market's just kind of sitting, comfy. Most people at 58, 57,000 are still deep in the money. If you bought the 68K, 64K top, well, that's okay. You're going to make it too. But for the most part, the market's really, really comfortable right now. 57,000 is nothing but a thing. So we haven't really started to see that profit taking yet. This is, just short-term volatility, some derivative stuff. Not much to worry about.
Okay. Yeah, I'll take it as an answer. Well, what I repeat in between the lines, everybody, I also expect, on the reversal day, you've seen nothing so far. You've seen nothing yet. On the reversal day, my bet is you actually see like 50, 60,000 chops, $50,000 drop in a single day. That is what marks potentially a top for me. But that's another story, whether or right I'm wrong or right about that, because I likely, until that happens, I likely have left already about 80% out of the about the crypto, 80% of the money out of the crypto. Well, there's a question for 100K end of a year. What do you think?
I don't know. I think I don't really look at like specific price predictions. The way I see this is like, what are the behaviors that we can kind of identify to see if we're kind of seeing exuberance in the market. And so, I try to veer away from like price specific things, especially when we attach timeframes to it. But I know what behaviors we'll be looking for, and I have a pinned tweet with about 20 different metrics that you can look for to kind of look at some of those behaviors.
Okay, I love it. Yeah, go ahead, everybody, and check out this pinned thread from Will on Twitter. Make sure again you follow these 2 legends. Those are insanely valuable tips that they are sharing. I'm super honored for that. There is a good comment. I've been married for 15 years, but I'd divorce my wife to marry these dudes. Like, this is some heavy stuff going on. People definitely appreciate it. I think 2 last questions. There is a question from Crypto 101. Are we seeing a lengthening cycle? Is there a chance to end the cycle without a blow off top. What do you think, Dylan?
I think there's definitely a lengthening cycle here. The classic, 4-year, or if you're looking at it from a block by block perspective, Bitcoin is, I think, going to extend longer than the traditional halving cycles before it. I don't think the halving matters as much as it did in the early days, just because of the diminishing effects of the cut in inflation rate and the supply issuance. And so I think more what's driving the market now is just the secular kind of trend of adoption around the world. You're seeing it from institutions, you're seeing it from retail, like we have for the last decade. We're now seeing governments, the banking sector, the energy sector. So there will, we're in a longer term uptrend. But I think there is some merit to what we saw over the last year, where we kind of see some sort of blow off top. Derivative traders get greedy. There's a mass wipeout. And then at the same time, at the bottom, you see derivative traders go the opposite way, and we see them get blown out. But just kind of with like the volatility in Bitcoin is natural. The price discovery is natural. There's no free lunch, and anybody that's trading with leverage or trying to, just free ride Bitcoin's ascent is going to get wiped out for the most part. And so I think we're going to see long term. I don't think we see another 80% 3-year bear market. I could be wrong there. But just, I think naturally we will see some sort of parabolic blow off tops, just with how Bitcoin trades, how the supply squeezes work, market sentiment, human greed, psychology, all of this stuff. It's not going away. Bitcoin is not going to trade up in a straight line in a linear fashion. It's just not going to happen. There will be boom and busts that are exacerbated by derivatives, that are the legacy system, blows up and delevers. We're going to see all of that over the next decade. So stay on your toes. But I don't think we see just, the 4-year boom and bust like we've seen for the last decade. I'm a firm believer that that's kind of out of the picture, but I might be wrong.
Okay. Well, we have about 1 minute left for the question. If you can answer, what is your exit plan according to on-chain metrics? No question, but perhaps you have a short answer.
To be honest, I kind of want to keep that one. To myself.
There you go.
What exactly I want to do? I'll tell you what I'm looking for. But as far as I think kind of my exit plan, I probably shouldn't be done by the average investor. So I don't really want to kind of, not in like a condescending way. I just don't want to promote people to do that. So
that is fine.
I think there's definitely some different things you can do in terms of options, hedging yourself with futures, or even considering maybe trimming a portion of your stack, saying you're going to take X amount off the table every $10,000 increments or whatever. For long-term guys, maybe you don't want to take any off the table, but for people that are looking to have some liquidity for the bear market, there's definitely some different strategies. I just don't want to share my personal one.
Sounds good. It sounds good. I'll take it as an answer. Try to come up, perhaps, guys. Follow Will Clemente on Twitter. Follow Dylan LeClair on Twitter. Make sure you actually take a chance and try a luck in the giveaway. I think, Dylan, you also had chances for special discount coupon, if I remember correctly.
Yeah, we put out the daily newsletter. There's a free tier that anybody could and should sign up for. But if you want to join the basically the daily newsletter we put out every day, we got a 50% code that I sent you, or maybe I can drop it in with like discount code Birb Nest. So if you want to check that out, go more than welcome to.
Amazing. I'll talk to you then of the record. We're going to put it in the video description to this beautiful show, everybody. 14-day free trading congress, day 7 is actually ending with this amazing session with Will Clemente, two legends, Will Clemente and Dylan LeClair, who've brought to you amazing on-chain analysis masterclass. For the final time, guys, smash the likes if you appreciate the time that they've spent with us. Smash the likes, leave some kind comments as well as a thank you, as an appreciation gift. Make sure, guys, you follow them on Twitter. Check out their newsletters. It's definitely worth it. Make sure you go ahead and smash the likes for everything that Will and Dylan actually share publicly. And not only you want to be part of that, you don't want to miss the top when it comes. And Will and Dylan are going to be there to tell you that. Listen, I think this has been pretty amazing session, pretty intense session. I want to thank you for coming over. Definitely amazing show. Thank you, Will, for coming over. Thank you, Dylan.
Appreciate you guys. Thanks for having us.
That's all that's all, folks. We have today for you. Make sure you stay tuned and join our Congress if you haven't. God bless you all. Bye bye. We are off.